Hey everybody, this is Jim at sp500chart.com. It is October 26, 2014, a little bit after 1 o'clock in the afternoon. And we're going to take a look at the S&P 500, see what happened over the week, take a look at specifically what happened on Friday, and hopefully from the chart glean, that's a good word by the way, G-L-E-A-N, pick up little tidbits of information, little scraps that many market people, followers may fail to pick up on their own to see if we can get a heads up on what might be getting ready to happen. Before we take a look at the chart, I do need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First off, I want to let you know I've cleaned up the chart a little bit. We've had some channel lines here and there for this descending channel, some little flags and what have you. If it's no longer relevant, then I'm going to clean up the chart a good bit. Here's the deal. We formed an inverted head and shoulders pattern when we saw that really steep decline back on the 15th that was not quite a one-day reversal, but it put in what candlestick chart followers would call a hammer. If we go to a daily chart, you can zoom in, you can see there's our hammer. That's a candlestick in which there's a steep move downwards, but then a recovery to approximately where the market high was. So basically, it's like a deep plunge and then a quick recovery that took place on the 15th. Ever since that, and by the way, we called that as a very likely market bottom. And the reason we made that call was because this extreme low back here in the low 1820s was actually underneath every single descending support line. In other words, in an already descending market, that basically was overblown. That's the only way I know how to put it. It was an extreme move that was just out of bounds in every respect to what had been taking place for the 2 or 3 weeks previous. So when you see that, you need to look at it and say, wait a minute, we just blew through a descending support line. What does that mean? Oftentimes it means we're getting ready to reverse. The opposite is also true. If you're in an upwards trend and suddenly you blow out over the top of an ascending resistance line, the best example I have of that, I think was it 2010, was it? If you look at the chart for silver, it just went ballistic for about a week, as I recall, and that was the top, and it hasn't been anywhere close since. I'm not saying that this was the same magnitude, only in reverse, but I'm saying that's what took place. Now, what's going on? Well, this is by looking at the week in review. The week started on the 20th. We were looking at this as a neckline. And that was really brought home. I believe we did that in last week's weekly review. But certainly by Monday, we had the idea of an inverted head and shoulders pattern scoped out. It had not broken out really yet. We got over this neckline by a little bit on the 20th, but not by a technically significant margin. We are now clearly a significant margin above that line, And the inverted head and shoulders pattern down here appears to be a spot-on call. I'll take credit where credit's due. We don't always get them just right, but that one we got just right. So looking back over the past 2 weeks, spot-on call on the bottom, a nice call on the inverted head and shoulders pattern, and another technically significant thing that happened during the week, actually three, come to think of it, is we got back over the top of this blue line, which is our support line that goes all the way back to 3/9/2009. But remember, this line is not extremely accurate because this line has not been tagged before this little spot right here on the 10th. This line had not been touched for over 2 years. So it's not easy to know exactly where this line should be when it hasn't been when our data goes back so far. In other words, it's like you got 2 points that are fairly close to each other, maybe 3. Then you got a long stretch where there's no data to give you any indication to really refine that line. So this line may be a little wonky, okay? But another thing is we are back, not only back inside the consolidation area that lasted from the 25th of September to the 10th of, let's call it the 10th of October. We not only got back inside that pattern, we during the week validated this resistance line on Wednesday, backed up a little bit, then on Thursday broke out over the top of this line, back tested it, and now we are over this line by about, I want to say it looks to, just eyeballing it, by about 18 points, which is very close to that 1% technical significant range. So a nice week. I think in review we could say the chart worked very well. We can say our analysis worked very well. Now what do we look for going forward? Well, the inverted head and shoulders pattern has a target of 1978. That's, that's what it is. So I think we have to go with the chart and say we're looking for 1978. Another thing that we could be setting up here is we could be making an even larger inverted head and shoulders pattern where this one is just the bottom of the head. The reason I say that is because if you look at this, we got a series of, we have a top to begin with, okay? Then we have a series of dips, a bigger dip. Now we have signs of strength getting up over some of these resistance lines that had held us down for weeks, and now we're over those. It wouldn't surprise me if we make our target, then maybe back up a little bit, and by then we could be looking at an even larger pattern, which would show this as a double left shoulder, head, and the rest is something that will happen probably from now through the middle of November, in a perfect world, if this is a good call. But I want to remind you again, this is in pencil. This is not written down on the chart in a Sharpie pen, because it is highly speculative. So what I would look for personally is, we've been in this nice little channel, even though this lower line has been kind of hard to get a read on. I think with what we've seen over the past 2 days, I think this line being parallel to this line right here, I think that's looking pretty good. So I'm gonna definitely leave that on the chart. We'll extend it on up here a little bit, and we'll see if we rally on Monday. It would not surprise me if we get to 1978 that we might break this ascending channel. Because if we look at this on the grand scheme of things, that is moving up at a ridiculous pitch. That cannot be sustained. This is a reactive move to that strong bearish plunge that we took over about a 5 or 6 day period, where the market lost about 140 points on the S&P. So what I'm looking for whenever this support line breaks, I would then start to look for the possibility of the formation of that right shoulder. Okay, I don't think that right shoulder would form and we would still be in this channel. That frankly would surprise me. But I would not be the least bit surprised if we get on up to one of these levels over here, either this top or this top, and we find some resistance there, and then we dip back down, maybe to retest this blue line. That's maybe even we dip back down and retest our green line, which we are now over. The fact is, the way a typical inverted head and shoulders would form would be the head and then the breaking of the channel that comes off of the bottom of the head back to the neckline. That would be the formation of the right shoulder. And if it is a right shoulder forming, then I would expect it to probably be roughly as deep as the left shoulder. Guys, where we are right now, we'd seen a whole bunch of these inverted head and shoulders patterns where we would get that truncated right shoulder. That might happen again, but where we are at this point in time, I just kind of have a sense. I have no real chart reasoning to back this up, but I've just got a sense that at this point in the market's history, a more typical, longer right shoulder which just seems to make sense to me for some reason. So I think it was a very nice week, a very good week. If we zoom in here, again, this line is a little hard to get a handle on, because there's only the low, and then what defines this line more than anything else until we got these touches was the fact that it was parallel to this one and that it lined up with the low that we set back here on the 15th. But looking short term, it looks like we've got a little bit of resistance right around, well, let me just draw a line so I won't have to guess. It looks like we got some resistance here right about 1963. And the fact that we've set two lows, well, actually 1, 2, I don't think we can really say that's a low. But the fact is, this looks like this could be a little pattern that is setting up that move to 1978. Because this would be essentially, if we use this as our lower line and then use this as our top line, I'll just make it the same color. Oops, wrong one. This would be a little triangle consolidation. So let's see if that does play out, and this breaks out the way it should. That would almost take us exactly, if we measure the depth of this, that takes us almost exactly to our 1978. So let's see if that works this week. If it does, it'll work on Monday. So it'll work tomorrow. Again, you could also maybe look at the last 2 days, and with the exception of not reaching that 1963 level early on the 23rd, this again has a little consolidation-like pattern to it. So guys, great week. I think it was a resounding success. We bounced at an important level. I think the way we saw longs cash it in despair, I think that kind of move sort of tells us that that is at least a decent short-term bottom, maybe even an intermediate term bottom. And when I say intermediate, by short term, I would say we would come up and we would start to challenge some of the previous highs. Okay? By intermediate term, I would say that we would not only challenge these highs, but we would exceed them. And we really cannot call this a long-term bottom because we already have a long-term bottom that was put in more than 5 years ago. So this is either short-term, getting us up to 1978 to challenge some levels, or intermediate, in which case we will be setting new highs. So guys, please be open-minded. I will remind you that this is a bull market that has been lasting for 5.5 years. That is already statistically a little bit longer than the average bull market has lasted in the modern stock market era. So, that said, what I would be looking for personally in terms of is this a top, I would be looking at three things. The first thing I'd be looking at is obviously the chart. Okay? The second thing I'd be looking at is are we seeing some kind of a blow-off top in which we are in a long-term sense getting up significantly above long-term rising resistance. Okay? That's a sign. That's sign number 2. Number 3, is there a sense of euphoria in the markets? And do people feel that that this stock market is just going to keep on roaring? What did they call the 20s? The 1920s? The roaring 20s. Nothing could ever get better. Everything was booming. Everything was wonderful. And then how did the roaring 20s end? I don't need to tell you, in the Great Depression. So, guys, great week. Let's keep our eyes on it this week. And, hey, it's good to be able to talk again, for one thing. I think I'm getting to some resolution of my voice issues. That doesn't mean it's not going to happen again, but I'm starting to think I know what's going on. So, guys, thanks for watching. Take care, and thank you so much for your support.